This is how you can increase your win rates using the SnR trading strategy. Guys, it has been a long time I uploaded on this channel. The reason is because I've been quite busy offline. Of course, we have been active on Instagram, X, and on Telegram. So feel free, check the video, the description in case you are not following me on those socials. All right, so let's dive right in. So don't worry about all of these things you are seeing on the screen. Of course, it's as a result of studies and here and there. So let me show you one or two things that you really need to learn as we move on. So the first thing that we must pay attention to is we need to understand the simple concept, which is SnR. All right, so the first thing that I want to do is this. It's simple. First, you need to ask yourself the question, where is price coming from and where is price likely to go? Take note, we are not predicting, we are reacting to price action. Okay, so this is a key level. Let me show you. This is a key level. Like I said, don't worry about all of this, just follow me, and you are going to, by the time we go to lower time frame, to be a bit clearer. Now for daily time frames, you can use a particular level up to 6 times for daily time frames. All right, for 4-hour time frame, we can use it up to like 3 times. Okay, so let's pay keen attention. So this is where price is coming from. Of course, we are seeing reaction from the downside, but the reaction is not only coming from the downside, it's also coming from the upper part. So we have direct reaction from both sides, both A and V shapes, which means we have a whole lot of consolidation right here. So all of these are just bunch of consolidations, right? But that's not the most important thing. The most important thing is the current price action. So first thing that we must pay attention to now is this current price action. 1, 2, 3, 4, 5 candles. What did price do? Price broke this high, and obviously this is a previous week high. So we are going to trade, want to trade the Wednesday. All right, we want to trade Wednesday, and of course you see price pushed or close above this high. So definitely we are looking for more buy setup. So the next question is, where is price likely to go to? So ask yourself, where is the closest liquidity level from where price is now? Obviously this is it, right? So we have at the back of our mind that we want to look for buy setups. Now, does that mean that if we see sell setups, we're not going to engage? No, that's not the meaning. So the next thing we want to do is we want to identify, first let's play price to the current day, to the day we want to trade. So we play the first 2 4-hour candles, which is Asian session. We are not interested in trading Asian. So this is what we have. We have this as 4-hour key level, right? And aside from that, now, why did we not mark the daily? Because where price is very far. It's very far. Of course, we can mark all of this, but of course, as you can see, this was a daily zone, and we have a key level there. But we need price to come and do its thing. We have a zone here. This is a 4-hour zone as well, so price might react to this. So what we need to do next is we need to go to a 2x time frame, so 2 time frame lower. All right, so what do we want to do next? First, we need to ask ourselves the questions on this particular time frame. What is price doing? Okay, so let's do the analysis together. So first thing first is like the video in case you have not done that. I'm just kidding, guys. So we have, as you can see, we have an engulfment here, engulfing candle, leaving what a classic V-shaped level right there. And we also have, of course, this is another kind of engulfment, but this engulfment is not the best kind you can see out there. And this, of course, we have an hidden engulfing candle right here. Between this candle and this candle, we have an hidden engulfing candle. Now beside that, we also have this as a break of structure to the upside. So therefore we are actually expecting higher prices on this particular time frame, right? But are we just going to buy? No, we're not going to buy just blindly like that. No, we have to stick with, we need to have context. We have gap engulfing here. Now this is a full engulfing, right? And whenever we see gap engulfing, it's telling us that price might likely want to change direction. So of course we are buying, right? We are looking for buy positions, and for us to, and the fact that we're looking for buy doesn't mean we're just going to buy like that. Price doesn't move this way, rather it does something like this. Take external range and comes in, takes external range, comes in like that. So that's exactly what's happening on this time frame. As you can see, external range liquidity is taken, so we're expecting price to pull to the downside. So in this scenario, what do? We simply look for potential zones where we want to look for our sales, right? Remember, we are buying. However, if we see a counter trade setup, we can literally sell. However, if you know you are not confident enough, you simply wait for the setups that is in line with the current trend. So in this case, what are we going to look for? So basically, as you can see, we have our break here. Look at that. That was the break. And let's play price and see. Look at, we have double break of structure as well. We have double break 1 2 right there, and it's clear. Let's see what's happening. All right, price reacting from a failed engulfing right here. So probably this could serve as our inducement. Okay, so this can serve as our inducement. So what do? What are we looking for? Price is not I've not gotten to where we want to buy yet, so we can sell to buy. And in this case, we look for are going to sell from the classic H shape level. Okay, so basically we are going to sell from here, and of course my stop loss can be above that high, of course, can be. So for gold, this is about 10 pips stop loss. Now this 10 pips stop loss is not a fixed stop loss. Okay, you can use 20, use 30 pips, now depending on market condition. So we can target 1 to 4. Or now, why are we targeting this zone? Now there's an anomaly right here. Look at this. Now this an hidden engulfing, so I won't say much about it in this video. Subsequently, we are going to learn about that. Okay, so let's see. Exactly 10 right there, and of course, let's see 1 to 5 risk to reward ratio. Okay, now remember, why did we not take it to this? Of course, price can choose to come here, come here, right? But we don't know yet whether price will come here. So it's better you take 1 to 5 is not small, right? So let's see. Remember, this is also a key zone where we really want to buy, and remember, it's a 4-hour key level. So are we going to buy it directly? No, we'll not buy directly. We simply wait for what market will do, probably after. Now take note of this: for every 4-hour close, you should go to a 4-hour and check. For every day, you should check the daily time frame, and the beginning of the week, obviously you should check the weekly time frame. Why are we doing all of those? The primary reason why we are doing all of those is so that we can be able to know exactly where price is coming from, where price is going to, and probably where price is at the moment. Okay, so let's play price and see what we've got. Okay, all right, so that's a nice tap, and obviously we'll wait and see what is happening. All right, so that's a nice push to the downside. Now price is giving us further confirmation. Why? We have a gap break right there. This is a gap break, and this gap break does not have a failed. Okay, it does have a failed engulfing. And what do? Basically, I'm going to look for my setup around this zone. All right, okay, so let's see this. We have, remember, see, this is a key level. All right, key level that failed twice, 1 2. So probably price will come and use that, and of course our stop loss can be right there. So where is our take profit? We can use the same zone, the same level. All right, so let's see what happen if. Okay, all right, so as you can see, TP have been hit. So of course you can choose not to take this entry again, or you can allow it. Now the reason why we might want to take this is because look at this, price have not tapped our level, right? So if we go to higher time frame to see exactly what has happened, then it will give you an idea of what you should do. Okay, let's see. Okay, that's a nice tap. Are we going to miss this? Now of course, if you know what you are doing, you just have to wait patiently. Of course, there are sometimes you are going to miss trades, especially if you want to be very accurate. Oh, we are tapped. Okay, so this is a nice one, and of course that's a nice reaction. Personally, I'm expecting price to push a bit down. All right, let's see. Let's play price push. Wow, that's a very nice one right there. So this 1 to 5, 1 to 3. Now of course you could say I could have also targeted the zone, but remember, how do we know, how we so sure that price will not reverse from here, right? Nothing is certain in the market. You just need to understand what you are doing. Now take note, we are in our key level, and what we are buying. Are we not buying? Yes, we are actually buying. So what do? We simply check very well, where is price reacting from. Price is reacting from this key level, gap level, classic level, and price failed to close below this zone. And what happened? The next candle open failed to close below this zone, giving us what? Giving us a classic level. So what we can do now is we can look for buy opportunity. Now you can either buy directly, and if you are buying directly, your stop loss will have to be below this line. So let's put probably 30 pips stop loss this time around. This is good, guys, this is good. So 30 pips stop loss is very okay with gold. And of course that's 1 to 3 rewards trade. Why? Because that's the next 4-hour key level. Now remember, this is a, what's it called now, this is a liquidity zone, and we're overall bullish. So scenarios like this, you can choose to push your TP, overall TP. It doesn't mean you have to hold to this level. So when price come here, you can take partials or take full profit. Another thing that you can do, you can simply wait for price to come here and do its thing. So in this case, we can put our stops here or even below this low. Okay, so probably that's more like a buffer in case because of spikes and the like. So let's check the time. Of course, this is New York session, and the equity hour just got opened, and let's play price and see how it went. All right, okay, so as you can see, that's a nice tap and rejection. So at this point, definitely I'm a bit confident that price wants to continue. So remember that our initial bias was to buy, right? So what do we have? We have a break of this structure. Not just a break, we have an MSU, we have a liquidity sweep here, which is inducement. We have an internal structure taken right there, and price broke structure. So this low ought to be a strong low. So basically we can as well look for further entry here. Now I'm not saying you have to stack all of these entries, no, right? What this entails is that for if you miss one, you can definitely catch one. Probably you're not so sure, especially this move. If you are still coming up, you will not be confident enough to even take this trade here, right? But now that this breakup happened, then you are now confident to take the trade, right? So where are we going to take the trade from? Of course, you can take the trade from this same level. So in cases like this, what do? Remember, you just have to take partials. This is, of course, this is a liquidity high. So price can just decide to take this and continue to the downside. So that's why you just have to take partials. And if you are swing trading, you don't just move your stop losses anyhow if you are swing trading. Because for swing trading, for price to continue, it has to pull back probably more than 50% and so on. So you just want to leave your stops at your stop loss, your initial stop loss placement, and allow price to run, especially when it takes a higher time frame level. All right, so at this point we can look for that buy if we want to, or let's say we miss the first two, can look for a buy here. Now of course this is what we call the miss, and this miss becomes what? An inducement. All right, becomes an inducement right there. Okay, so the question is, why are we not taking the trade here? Okay, of course you can decide to take the trade there, and your stop loss will be here, but that will be a bigger stop loss. But there are other things we look out for in order for us to know whether price we use here. Of course you might be asking yourself, oh, how do I know that this is whether price we use here or here or here? We don't know, guys. We don't know the one we use. But how do we know? One of the way we know is we need to look at candle reaction and time. Candle reactions and time. Okay, so in this scenario, what am I seeing here? What makes me feel that price is going to use here? Obviously, there is no EFG here. There is no field engulfing in this area. So for me personally, I'll be more comfortable taking the trade right here. And of course, we can as well target. Now, it's even more easier to target higher prices. Higher prices. I tell you the truth. Higher price. Now take note, from where price is to this point of liquidity, don't expect that price will have to go there that same day, because this is a mistake most traders make. The fact that, oh, you are bullish does not mean that you should just target 1 to 20, 30. Of course, when if I look at this, if I reduce my stop loss now to this zone, you will see that the risk to reward ratio will increase, right? But you see, this is not the safest way to place your stop loss. Even if I know that price will push here, anything can happen. This is price action, this is the market, and of course this is gold. So let's play price and see what happens. Okay, so it is very important. Of course, we're having a reaction right there. So let's see, can we, okay, are we tagged or price room? Of course, up. Okay, so you see it right there. So that is very nice tap and rejection. Let's play price and see. So guys, in case you really want to learn more, feel free. Of course, this key level was broken, so we might expect higher prices, right? So please do well to join the Komepips Academy. Check the video description, join our premium services, and of course, oops, you want to learn more, feel free to join us. Okay, so I hope you have been able to learn one or two. Feel free, ask me your questions in the comment section below. Don't hesitate. And of course, you have personal questions, go and ask me on X on my comment section, or feel free and reach out to me if you want to join the academy. And I hope to see you on the next one.